Right. Hey. Hello, everyone, and welcome to the final day. Hey, Hardeep. Welcome to the final day of How to Buy a Hotel Challenge. So I'm excited that you all have been with us. We have some folks I know that have been here since day one. I know some folks have been with us. This is their first day. So how many people this is their first day of the challenge? Okay. How many people this is their second day of the challenge? Okay. Third day? Okay, then I guess everybody, y'all pretty much been here since the beginning. I love it. All right. Well, let's see how many people. Third day, every day. Yay, yay. Do we have any first days? Okay. I don't have to repeat myself. I have to watch the replays. Okay. Welcome. So just a high level recap. Day one, we talked about Empire. Day two, how to find the airlines hotel. Day three, we talked about how to buy a hotel internationally. And day four, how to use, and tonight we're going to talk about how to use OPM to fund your deal. For those who don't know who I am, I think I feel like y'all do because y'all been here with me since the beginning of the challenge. Davon Reeves, known as the Hotel Queen, uh, and just let you know you're in good hands when it comes to hotels. High level, started from the front desk, got in hotel ownership, have three. Well, I bought three hotels, sold two. Now I have one, Home Two Suites in El Reno, Oklahoma. I've been featured in just about everything with the exception of Essence and received numerous awards. So just want to let you know that you are in good hands. All right. So day four, why OPM? So most hotel deals are actually funded with about 70 to 90% capitals from others. Investors, we don't buy deals with our own cash. We structure them. Raising capital is not begging. A lot of times people, they don't want to do that because they think it's begging. Think about it as presenting an opportunity, and OPM allows you to go further, faster without waiting years to save up. That's actually how I got my first deal. It was through OTM, and that's OPM. That's actually how a lot of people got their uh first deal. Okay. Sorry about that. Okay. All right. So OPM. So this can include private investors, friends and family, equity crowdfunding, institutional capital, capital partners, retirement accounts, self-directed IRAs or EQRP. Okay. So capital stack. Understand the layers that fund a hotel deal. So you got equity, so investors who own a percentage of the deal, debt, or mortgage will be like banks, SBA loans, which stands for Small Business Association or private lenders. A mezzanine or bridge loan, think of it as a short term or gap funding. And your role as a deal sponsor is the one who puts it all together. So this is a simplified version of a capital stack. So basically, a capital stack is the money portion of the deal. Does this make sense?
Yes.
Okay, good. All right, because I know a lot of times this sometimes is like the most complicated part, right? So, and some people here, some people, some people call this the sources and use. So if you ever see it in the deal, sources and use or capital stack is pretty much the same thing. Okay. Ready. Okay. So then we have why people invest in you. So people invest when they believe in the deal, because really, when people invest, they're not investing in they are investing in a project, but they're investing in your capability of actually executing the project, so that way they can get their money back. So they believe in when the deal is strong, location, returns. The team. Are you competent enough to put together the right team? So that's why I was talking about that before, how important it is, because people, when they invest in you and you bring in a B team, not even a B plus team or even an A minus, they may not really want to rock with you because they're like, you know what, I don't feel confident that you're going to get the money back. The plan have a clear timeline, exit strategy, communication. And then themselves, your job is to help them believe that they can do this with you. So what investors want to know, how much you're raising, what's the return, cash flow, equity, tax benefits, what's the risk, and how are you mitigating it? How the biggest thing is, how do they get their money back? So if you don't have a clear path on how they're going to get their money back, they're probably not going to invest with you. I know I've worked with a lot of folks, and or even a lot of people who pitch their deal on Vestor, and I'm unsure, and I'm like, it doesn't make sense on how they're gonna get their money back. I've had people pitch to me, and it took them like 20 minutes to even tell me what the project is, and I was like, you just confused me. I had to simplify it for them, and I was like, nobody's gonna want to invest with you, because if you take that long to communicate what you're trying to do, then they're gonna be like, okay, you don't know what you're doing, because you should be able to explain everything like if you're talking to a sixth grader, right? I had to break down the hotel stuff so that way you'll understand, right? Because if I make it all high, you'll be confused. So you have to break it down, and you can't assume that everyone knows everything. So what's your track record or your team's experience? How to pitch like a pro. So your pitch should include your vision, market research, the deal numbers or projections, your team, the exit strategy, and of course, some time for Q&A. Definitely confidence comes from preparation. Know your numbers, be concise, and be clear. So tools you need to raise capital. Wrong thing. So mistakes to avoid, pitching without knowing your numbers, asking for money instead of offering opportunity, over promising returns, and skipping the legal structure or compliance and not building relationships first. So definitely skipping it. And when you're raising money, you definitely want to have some type of legal implications or work with somebody, because you're dealing with money, and you just want to make sure that you're protected and the investor is protected. So some of my favorite capital raising strategies would be building a wait list of investors before the deal. I always tell people, like my inner circle folks, so the people work with me directly, make a list of 100 people who you could possibly pitch to. And it's better to do it beforehand, because if you wait until the deal comes, you're going to forget people, right? So go ahead. I know some folks, they did that. And when it was time to raise capital, it was a lot easier because they already had their list. And so as opposed, because sometimes if you wait, some people, nobody wants to feel like that they're an afterthought, right? So, I could be like, hey, Melvin, I got this deal, but I need you tomorrow. And you're going to be like, wait, what? But, you may not want to do it because you're like, why'd you wait so late? So that's things you want to think about. Leveraging retirement funds, EQRP, self-directed IRAs, strategic partnerships with operators and lenders, hosting investor webinars and one-on-one calls. Here's some homework and action steps. Identify 3 people in your network who may be aligned as investors. Draft your investor one liner, what you do, what you're working on, and who you help. Watch your real estate investor pitch on YouTube. Note what worked and what didn't. I tell my people to watch Shark Tank. Shark Tank prepared me to pitch. I watched so many hours of Shark Tank. It was insane. And that's literally how I learned to pitch, was watching Shark Tank. I noticed the question that they were at, the question, it was a lot of times, it was this, if you notice, it's a lot of it's the same questions. I noticed why they said no. I noticed the pitch. I noticed the people who did well. I noticed the people that didn't do well and they called them out on it. I noticed the people who got funding. I noticed the people who didn't get funding. So, I paid a lot of attention to that. So, and then the more and more I pitched, the more and more I got better. And so, because once you know how to pitch, because you have to pitch to everybody, you have to pitch to the lender, you have to pitch to, the brands, you have to pitch to everybody pretty much, about, because sometimes people don't see your vision, and you're just since it's a good idea for you, it may not be a good idea to somebody else. You may say a Marriott will make sense here. In your mind, a Marriott would make sense, or a Fairfield Inn make sense here. And Marriott would be like, well, we don't see it. So now you have to paint the picture for them to see it. Again, in your mind, you're like, what are you talking about? This, because it makes sense to you, but sometimes you have to pitch it and how you communicate it. So write down 3 reasons someone would trust you with their capital, and then post your one-liner or investor pitch draft in the group for feedback. All right, so what's next? So you got the mindset. For y'all to still be here for 4 days, you definitely got the mindset. You found the deal, you looked internationally, and now you know how to fund it. All right, so I'm hosting a 5-week mastermind starting on Monday. Monday, that says July 29th. Really should be July 28th. You'll leave with real deals analyzed, your pitch deck built, lender and investors relationships, confidence, and clear strategy. So basically, this intense, by the end, you should definitely be. We've had some folks who submitted LOIs on deals. We had some folks who went under contract on deals, and it wasn't because it didn't go through because of them. It just didn't go through because of the seller. But the point I'm trying to make is it's intense for the folks who really trying to buy a deal. Tommy will come in, um, and walk you through how to analyze. And then we'll have an in-person meeting in Atlanta on July 21st and July 22nd, where Tommy and I will be basically at the end of the program, everything that we talked about. And then we'll walk you through and we'll just go through the deals. We'll go through your pitch. We'll go through analyzing the deal. Because I know this practice, the people that do really well is when you practice your pitch and when you go through the deals and you're able to analyze it. So we have only a few spots to remain. There's early access ends tonight. So let's go ahead and build your legacy. And you know, I'm always preaching about Empire Era. So I'll go ahead and put the links in the chat. And then of course, no, it's starting July 29th. But I'm sorry. Yes, August for the in-person event is August 21st through August 22nd. Yes. Okay. And then that's the link to sign up. And Elisa, you already, if you want to join, you can go ahead because you signed up. You signed up for something similar already.
I will be in Atlanta the last 2 weeks of Atlanta. I'll be staying at my place in Atlanta, so I'll be able to attend.
Okay, good. Okay,
Mhm.
put you there. Okay,
All right.
good. I got you.
Okay.
Yvonne, where's the link to this? And
I put it in the chat.
thank you.
Yeah, I put it in the chat. So it's 5 weeks. It's only 10 spots because I don't want it too big because, you know, we want it intimate because I want to be able to answer your questions. I want you, in the beginning, we're going to actually go through a deal, like whatever deal you find, we're going to go through it throughout the whole 5 weeks. So that way you understand all of the different components. We'll have a legal representative come in, my go-to lawyer who has helped close a lot of deals of my students. So he'll come on and he'll be speaking. You know, we'll have walk you through how to raise capital, my tactics and what I've taught people to help them raise millions of dollars. Walk you through that. The probably the most thing that we'll talk about the most and probably the hardest is analyzing the deal and pitching. Everything else is not as hard. It's just the raising it. It's really raising the capital, and then analyzing the deal. That's probably, I would say, the hardest part in my opinion. And sometimes what people do, they partner because some people they're really good with numbers, but they're not good at pitching. Some people are good at pitching, but they're not good with numbers. So we've even had some folks who joined the program and they came out as business partners and they're partnering on deals together. So it's just building, again, building that community and working with like-minded individuals. So I'm here if you have any questions.
So how do you typically structure your deals in terms of general partners versus limited partner?
It depends on the deal. If I were you on the first deal, I would structure it where it's like, because that typically your LPs or your limited partners are putting a majority of the equity in. So you could structure it like 60-40 or 70-30, where the general partnership will get 30 or 40%, and the limited partners will get the 60 or 40%. So what that means is that your profit, that's of equity. So meaning, 60% will go to the LP, and then 40% will go to the general partnership. And then the general partnership, they will make their money off of the fees that are collected: disposition fee, refinancing fee, acquisition fee for managing the process, and an asset management fee.
So then that's 70%. So when I got it back into it, with them getting a 8 to 12% dividend, and then what's left is a split of the excess cash flow.
Well, that excess cash flow, yeah, you split it, right? So whatever after you pay your mortgage, and after you pay your debt service and expenses, then whatever's left with the profits, then you split that with your you split that the 60%, or whatever you structure it. I would just do
Right.
60% to the LP, because they're 60 or 70% to the LP because they're putting the majority of the equity, and then the rest to go to the general partners.
Right. And then, but that dividend is factored within that, the split of the profits, right? Because part of what they're going to get is that dividend,
Correct. Yeah.
then, and plus excess cash flow.
Correct. Yeah.
But Melvin, what do you mean by the dividends on it? Can you break that down? I'm just kind of asking group questions.
So if you offer preferred stock, you're going to offer it with a dividend, somewhere between 8 to 12%.
I wouldn't put that number out because you don't know what the deal would actually generate, because the deal could actually generate 15%. So the dividend is basically the shares that you're sharing with your investors.
Mhm.
It's basically the profits of the hotel, and then you're making distributions to the investors. That's what dividends. It's like a stock. If you invest in a stock or invest in a REIT, you're basically getting the profit from it, and so it's coming in is dividends.
And we can set terms on it basically on quarter or monthly or however it suggests. Okay. What I'm
Typically do quarterly. Yeah, it could be monthly. It could be based off the performance of the hotel. Some people just do they just do whenever it's access money. Some people just do it quarterly just to keep it,
right to keep
some
them.
people just do, and some people just do monthly because they don't want all this excess cash, and by the time the quarter come, they don't trying to figure out what to do with it. So some people just do it monthly.
That makes sense.
Like at one point with our hotels, we were issuing it monthly.
So y'all
Was-
didn't have like a preferred equity note with a specific dividend?
Mm-mm.
Like on the deal I'm in now, I get a 12% dividend and then percentage of excess cash flow.
No,
But I
and
guess
every deal is. I wouldn't even get into that because every deal is different. So don't even compare deals because it's based on the deal. So it may
right,
not make sense to do a preferred because it may not be enough space for it to do preferred. Sometimes people do preferred because they need money right away, or the deal, it's an okay deal, so they have to do something to incentivize the person to get in. So that's why they would do a preferred. So
Right.
sometimes a preferred isn't even necessary. So what a preferred mean is that you either invest more or you invest by a certain deadline. And so you get your dividend before
right.
everyone else. So that's preferred, but not all
Now,
deals do that.
now I like what you said better, where it's simpler if you just say, hey, I'm gonna split the profits 60-40, 6% going to the limited partners. Excuse me, and then that's just straight. And then the split, how much they get is based on how much they invest as percentage of that 6%.
Yeah, like your first couple of deals, the more complicated your deals get, the more complicated your investment structures will get. Right now, it'll be it's just real simple. This is your first hotel, they're smaller. It won't be that much extra to give. It's just your first deal. So I would,
Right.
don't anyone listening, don't overcomplicate it, and you can ask like what to get an idea of the different deals and how you can structure it, but I wouldn't use that as something that all deals are like that, because it literally is, because maybe when you do the deal, by the time you pencil it out and you analyze and do the numbers, it may not make sense for it to be 70-30. It may make more sense for it to be 60-40, right? So
Right.
it depends on the deal, and once you analyze it, what will make sense.
Yeah. And then what about those you mentioned? I didn't think about disposition fee. I know acquisition fees. There's an annual management fee that the general partners can earn. I guess then the disposition fee.
The disposition fee is when you sell the hotel, because you have to manage the process. So
Right.
acquisition, you're acquiring a hotel, so it's a lot of work acquiring it. When you're selling the hotel, it's a lot of work. Like we just sold our hotel, so we took a disposition fee, the general partners, right? So we get an extra fee because to manage the process. If we were to refinance it, then we would have taken a refinancing fee, because you have to manage that process. It's a job, pretty much. So
Right.
that's where the general partners would, make their
Makes
make their money, and then the asset management fee.
And what's the percentages for the acquisition fee,
It's like
management fee, and
it's
disposition?
it's like 1 to 3%, but it depends. Again, it depends on the deal, because it may not make sense for it to be 3. And you have to disclose it.
Right.
Yes. I've seen something like that where GPs will charge like 2%. And then back in, I think after a certain amount of the dividends were broken up, then they start paying themselves. For example, if the investors made over the 10%, then at the 11 point, the GPs will take 1, and then they'll take again at the almost like 1 1/8 on the 1%, or half.
Yeah. So it has to be, like I said, if I were you, I would disclose it. Again, work with the real estate attorney, another, or securities attorney, because they've seen so many deals. A
Right.
lot of structuring I actually got from real estate attorneys or securities attorneys, because they've seen so many deals, and they're like, well, you can do this, you can do that, you can do this, you can do tiered, you can do this. So that's how I learned the different ways of structuring, either doing deals, of course, talking to, folks in the industry, your peers, or just getting it from your attorney. So a lot of the risks, because you're paying them, so you might as well, you paying them tickets,
Yes, you
right?
can. Right.
Right. So they need to come up with strategies. You know what I mean? And they're structuring it for you, right? So a lot of that stuff you can leave, to your securities attorneys. Yeah, so the securities attorneys or real estate attorney, because depending on some deals, you don't really need a syndication attorney. So syndication is basically when you're getting a group of a lot of people together and they're coming to invest. Starting off, y'all may have to do that. I know a lot of people are like, oh, I only want to work with a couple investors. That's probably not going to happen. I'm just going to be realistic. Um, people, that everybody wants to do that. You have to get to a certain level and do a lot of hotel deals for that to happen, because you have to show results, right? And like what I was saying before, prior to the call, you know, um, you may know a lot of millionaires or even billionaires, and you may be like, and in your mind, you thinking, hey, they're going to invest in this deal because they got money. That's not how it works. Jay-Z, I think it was out, his cousin asked him for like 4,500 or something like that, or told him he got this $1 million idea and it's going to happen overnight. And Jay-Z was like, no, it don't work like that. So I'm saying all this to say is sometimes we get in our head, oh, that person has all this money, they're going to invest. Nah, they may not be, because some people, they just don't invest in hotels. That's just not what they do. Some
Right.
people just, they stick with what they know. It worked for them. They made plenty of money of it. I know a millionaire, probably close to a billionaire. He won't touch hotels. He had a bad experience. He was about to buy a hotel like 20, 30 years ago, whenever the Olympics was about to come. He was about to buy a hotel. He had the wrong people on his team. He didn't have the right counsel, and he made a big mistake, and he lost a lot of money. He was like, I'm not going through this again. I'm just going to stick with what I know. I'm in quick service restaurants. That's what I know. That's where I made my money, and that's where I'm staying. So nobody can approach him with a hotel. I mean, we've had conversations, he picks my brain about hotels or whatever, and I pick his brain about quick serve. He probably not gonna buy one. He probably not gonna, and he has the money to pay for a hotel in cash if he wanted to. He has plenty of money. But that's just not what he does. That's just not where he is, because that, and so you have to take that into consideration, and sometimes people overlook the people who may have money, because sometimes people think, oh, they drive this and they have this type of car and they have all this money. And I used to think that too until I started raising capital. I'm like, now I don't judge anybody. I don't say anybody have money, anybody who don't have money, because it's people who be driving a minivan that cut me $100,000 check, and the people who driving a Lamborghini who don't have any money to invest. So, hey, I've just learned along, and you'll learn that too. So the point I'm trying to make is, don't think because someone, seems to have all this, that they have all this money. And don't think just because they have the money that they're going to give it to you to invest.
I can say this on the lending side of it. When I do take meetings with clients and those big acquisitions,
Mm-hmm.
one of the things I'm listening to, if you have money, we can have further conversations.
Mm-hmm.
Very straight to the point. This conversation is going nowhere.
Mm-hmm.
You guys will figure it out a lot why this is happening.
Mm-hmm. Yeah, so to your point, you in the money business, so you know how it is. You like, if we ain't talking about money, then what we talking about? Because y'all are trying to get to the closing table, So, yeah, that's just, and for the folks that are getting in the hotel space and commercial real estate, and the higher level of business you get, the less patience people have and the less nicer people are, because we just
I'm
don't
good.
have.
I'm good.
You said what? Oh,
Sorry about
yeah.
that. I'm at in a bar.
Oh, that's okay. I'll put you on mute. Yeah.
Great
And so,
question.
the point I'm trying to make is that, um, sometimes you may not get callbacks. Sometimes people may not necessarily, talk to you or anything, because you haven't presented yourself in a way where they feel like that you're gonna get to the closing table. Because if you're not getting to the closing table, then what are we talking about? Like, if the sale won't be made, nobody eats and nobody wants to talk for free. You see what I'm saying? So that's just and so that's what we do in the program. We help you along the way. We walk you through it, walk you through each part of the deal. We'll have someone from the financing side, come over and talk, walk you through what lenders look for, from the hotel standpoint, what you need to have from a balance sheet standpoint, from a personal financial statement. Excuse me, we had one lender who spoke to my inner circle group, who it's a deal-based loan. So meaning you can have bad credit and you can get the loan because it's based off the deal. Right? So it's a lot of different, and if you can find, and in this particular company, they handle both the equity and the debt. So you may not have to come to the table with as much money if it's a really good deal, right? So so it's a lot of different strategies, and it's a lot of different ways that you can get to the closing table. You just have to, again, have the right people on your team who've done, deals, and who's gotten to the closing table multiple times. These are good questions. Any more questions?
I'm ready to close.
You ready to close? All right, let's go. Let's go. Let's get you to that closing table. I know we had some questions. Folks had questions about raising capital. This is the night. Maybe I answered it throughout the presentation. I just want to make sure we get your questions answered before we hop off the call, because tonight is the last night.
So Devon, I just had a question.
Mhm.
If we have a private investor, can we use the funds from a private investor in addition to funds from a private lender, combine the two?
What do you mean private investor? Are they coming in as equity or debt?
Probably equity, I think. I'm not really sure. I haven't asked my partner, so I just know
Okay.
he has a private investor interested. So
I would probably bring the private investor on as equity if you can, because sometimes lenders, they want to be the first lien position. It's hard to get somebody to come in as second lien position. So
mhm.
yeah, I would bring them in as, and if they coming in as equity, I mean, everybody does that. They just now if they are investing over 20% of equity, then they'll have to be listed on the loan documents.
Oh, okay, okay.
Yeah, they're going to be,
Mhm.
because the lender, they're going to see everyone, they want to see all the percentages and anyone over 20%. Depending on the lender,
Mhm.
I've seen some people do like 19%. So sometimes the lender, they want to know, the SBA, they want to know everybody because it's a government loan, so they got to make sure nobody's a terrorist. But uh the but if it's a private investor and they're coming in, yeah.
Okay, but you said if it's less than 20%, then it can just be for debt only.
No. What I'm saying is if it's less than 20%, then they don't have to, they can still come on as equity. They just don't have to be on a loan.
Loan. Oh, okay, okay, okay. All right, thank you.
Problem. That was a good question. Oh, it's raining. I'm like, what's that noise? Okay. It's raining here. All right. Do we have any other questions? What? No questions? All right. Well, I hope to see you all next week. Hopefully you'll be with me for 5 weeks. And then to see you in Atlanta. We're gonna be at a Black owned hotel. We're gonna have a special guests talking about franchising, talking about raising capital. I'm gonna help you through your pitch. You may call me a drill the folks, they call me a drill sergeant when it comes to pitching. I'm just, I just want to make sure it's right, because you're asking for a lot of money. So, it's better to, to get it right before you start, talking to folks. So I hope to see you all next week with the start of the mastermind. I thank you all so much. If there's not any more questions, I thank you all so much for being with us for these past 4 days. I hope that you all learned a lot. I hope that it made sense. Um, Wait, do we have another question? Okay, thank you, thank you. I appreciate you all so much. Definitely it's a replay. I hope that tonight was helpful. It was a high level of how to raise capital. Um, you were able to learn how to do a hotel internationally. You were able to learn about analyzing the deal and just getting your mindset ready. So I appreciate you all. Sorry about the time change, but I thank you. And if we don't have any more questions, I will see you all next week in the mastermind. Thank you all so much. All right, I got all the questions. Thank you all. Have a good night.
Good night.
Good night. Thank you all.